Good afternoon, audit class. My name is TJ Berard, and today I'm here to talk to you about auditing through the computer, auditing around the computer, and auditing with the computer and their differences. Before we start though, I want to throw up 3 questions that every accountant, whether you go into audit, tax, or forensic, must be able to answer. First, is auditing around the computer obsolete? Second, what are CATs? The acronym is CAATS. And third, why is tracing so important? Now on to the presentation. Prior to 2002, and actually prior to the 80s, it was very common for almost all audits to be conducted on an around the computer basis. Many companies didn't have computers. To audit around the computer is called the black box approach. One of the reasons it's called the black box approach is because you can't see the computer. It was necessary because early in the accounting audit days, auditors didn't always have the knowledge of different various computer software types or client access to client computers. Because of this, it was known as the black box approach or the non-computer approach. Many in the field today feel as though auditing around the computer is an obsolete method. What you'll find out later on in this presentation is that auditing around the computer isn't going anywhere. As a matter of fact, it's still a mainstay in audits, and it's necessary. What you'll also find out is based on the generally accepted audit standards, or GAS, that you can no longer make an unqualified opinion on a company's financial statements if you only rely on around the computer or black box approaches. Auditing around the computer basically involves tracing. Tracing is when you take an item, document, or transaction and you start from its beginning to its end. Whether you're using a financial statement or, in the example I'm going to give, you would be using bank statements. You have a customer, you sent the customer a bill, they sent you a payment, the payment was received, you would put the funds in the appropriate account, reduce the accounts receivable, reduce the accounts payable if it was an item that you paid or purchased on account, and then raise your revenue. To make sure all of these things work, you would have to trace an item. An example being, if you bill the customer for goods that you sent, when they make the payment, you have to follow that through accounts receivable, through the revenue account to make sure you have all the funds received. Tracing is a valuable tool whether you're using through the computer or around the computer, because even computerized systems use the same principles in tracing. The second approach I'm going to discuss today is the white box approach. The white box approach means you have used the computer or you are using a program internally built into the computer, which means with the computer or including and through the computer. Through the computer test approaches are integrated test programs, ITPs, or parallel systems. They have benefits and drawbacks. In the white box approach, if you're using ITPs or parallel systems, ITPs, integrated test programs, are generally less expensive than parallel, but the software used to audit with the computer is built into the computer program from the ground up. So you have test packages you can run to make sure everything is working, and which allow auditors to test their assurances to be able to give unqualified opinions. A parallel system works very similarly, except there are 2 completely separate systems that run in parallel. They're a lot more expensive, but if a system crashes, you have a backup system. Both of them run transactions through the system to verify and check. In a parallel system, you run 2 transactions through each system. If the numbers come out the same, then you know everything is working properly. So the questions we now have in the white box versus the black box approach. We're using software. The software in the white box approach is called CATs, Computer Aided Auditing Techniques. As AIS students, and AIS was a prerequisite to this course, everybody in here has taken and worked with SAP, ACL, or IDEA. ACL and IDEA are audit software. Accounting command language or audit command language is what ACL stands for. That's a primary Excel type software package that is used by auditors to check numbers and financials in accounting. This has made auditing extremely efficient, very fast, and very effective. So it stands to reason the average person would feel as though auditing around the computer is obsolete. I give you two solid reasons that auditing around the computer will never be obsolete. One, if a computer system is down, you're going to have to resort to auditing around the computer. Two, smaller companies who struggle with segregation of duties protocols, auditing around the computer is truly the only way to verify that all of the money or all of the receipts or all of the finished goods or all of the inventory were properly accounted for in protocols. Another thing is an inventory count will never be able to be standalone on just computers. You're always going to have somebody physically go verify those counts, which is in a sense tracing and auditing around the computer. So to answer the three questions at the beginning of the presentation, it's simple. Auditing around the computer, although it can't be relied on as the sole standalone source for an audit for publicly traded companies, isn't going anywhere. Two, computer-aided audit testing tools such as ACL and IDEA will only get better and better and be used by more and more companies and auditors as the days go forward. Three, tracing is relevant whether you're using computer-based auditing or whether you're doing it around the computer. So, having answered all three questions, does anybody else in the class have any questions for me about auditing around or auditing through the computer or the necessities which bring about their need? Thank you for your time.